GetICTV, you don't just follow headlines. You understand the story behind them. AI, unbiased financial insights, interactive charts, curated videos. Watch, learn, think. Start now at GetICTV.com. Oliver Renick, anchor of the future of finance, on how our AI is reshaping investing.
I asked our AI,
Okay.
who is kind of interested in this type of fund. You kind of already hinted at this, but I said, what kind of investor? I want to hear your reaction. It's less about conservative investors and more about those who want predictability with the trade-off. Buyers are trying to beat the market. They're outsourcing timing to the product itself. Is that kind of what we're just talking about?
We're diversifying timing risk. Yeah, exactly.
Okay.
Yeah, we keep reading here if you want, but
The high net worth investors who want the smoother coupons and sideways markets. Advisors managing clients who fear the drawdowns. That part I think we know is part of the sales pitch. And yield seekers in low vol regimes. That kind of comes back to what you mentioned earlier. Is it it's different than a bond proxy, but like it kind of can't be thought about that way.
Yeah, you're going to get that high stable income level. There are risks. The risk you're taking on is a severe sustained market drawdown like 2008 as we described. But people who are seeking income, they're using this inside their portfolios. The volatility is going to look a lot like the S&P 500 over time. So you have to be comfortable with equity-like market volatility, and you can exchange that for a really high stable coupon. So the last piece that we didn't mention is taxes. The coupons are remarkably tax efficient. About 90 to 95% is going to be treated as return of capital. So that's just going to reduce your cost basis. You'll pay long-term capital gains if you've held for longer than a year.